we believe that autonomous mobility, just autonomous taxi platforms, forget drones and robots, but a mobility, and forget trucks too, that will deliver $8 to $10 trillion in revenue by 2030 globally.
So Tesla doing Uber?
Tesla doing autonomous Uber.
Autonomous Uber.
I'm talking about 8 to 10 trillion for the global market. That's everyone who gets.
And Tesla will lead that.
Tesla will lead it here in the United States. And here in the United States, when you think about, okay, China is moving very quickly in this direction. I'm sure they will not let Tesla be in the lead there. It'll be another company. But in the United States, because transportation costs are so much higher here than they are in China, the value of this is going to be much higher in the United States.
Okay.
Right? So the 7 to 10
people will pay more here.
People will pay more.
Yes, agreed.
You know, if you've used Uber here in St. Pete,
that's all we do.
There you go. Yeah. Well, the prices have gone up dramatically here, as I'm sure they have in the rest of the world. So this need for an autonomous solution has increased dramatically.
You could pull the driver out of the car, but have the car do the same thing. That's a much better business than it is today.
And if you've been here for a little while, you'll see parking is a problem. You're in Uber, so maybe you don't see that. But in the autonomous world, right now, here in the United States, for every car in the U.S., there are 5 parking spaces.
Right.
Okay? With autonomous, you'll just need 1. Think about the real estate value that will unlock.
Right. Yeah, my car just sits in a spot 80% of the day, maybe
That's
more,
actually
90%.
95%.
Let's talk about Elon quickly. I know your fund has become associated with Tesla because you were one of the earliest to recognize the story there, and you made a lot of money for people being an investor in Tesla. What are your thoughts on the dedicated CEO for Twitter? Do you think that's meaningful for Tesla shareholders now that maybe they get more of his focus on some of the things that you're talking about? Is that something that you're excited about for the second half of the year?
Yeah, you mean for Tesla specifically or Twitter?
Well, I guess getting him away from the day-to-day Twitter stuff that he's doing and having him back focused on the future.
Well, as we've looked at Tesla's evolution here, it was critical that Elon be there on premise as they were scaling the Model 3.
You don't want him in San Francisco. Like the less time he spends at Twitter.
Yeah.
Right.
So, well, it was in Fremont, which is close to San Francisco.
Okay.
He was sleeping on the floor, right?
Yes.
So he got that. That is, I would say, almost on automatic pilot. As they build more and more efficient factories with robotics and AI, the factories of the future, they're going to get more and more efficient and more competitive relative to other auto companies. So he's using his mind. And how, there may be things he's learning from AI and Twitter that he's going to bring back to the auto market and vice versa.
God, let's hope not. Yeah. So I want to ask you about the Cybertruck.
Yes.
This seems to me that it's going to be the next Tesla battleground. Now that a lot of the old battles are, have been won or lost. The predictions for the Cybertruck range from it's going to flop on day one to it's going to be one of the biggest selling things Tesla's ever done. I don't have any opinion at all. I don't follow it that closely. What do you think is going to happen? When is it supposed to happen? And are you baking that into any of your modeling?
Yeah. So we actually, Sam Corris.
Are you going to drive one? Let's start with that.
I've actually thought about, I have a 3 and a Y. I don't really need anything else. But I've thought about it because I do think they're very cool. Sam Corris, who's our director of research for autonomous technology and robotics, just wrote a piece on the Cybertruck. And we think they're, given the costs that they're taking out of this part of the market. We think they're going to be highly competitive, as well as being competitive in terms of power and range. So Elon's very focused on costs, power, and range performance.
Following an extraordinary 2023 and 2024, when Tesla shares rose 102% and 63%, respectively, the stock is facing different sentiment in 2025. As of this writing, shares are down more than 18% year-to-date. The growth stock's recent pullback raises the question, is now a good time to buy shares of the electric car maker? After all, Tesla's CEO Elon Musk recently told investors in the company's fourth-quarter earnings call that he sees a path to the company potentially becoming the most valuable company in the world by far. If Musk is right, today's pullback would represent an extraordinary buying opportunity. At face value, Tesla stock looks wildly expensive. Shares currently trade at about 163 times earnings. This is especially difficult to comprehend when looking at the company's most recent quarterly results, when total revenue grew just 2% year-over-year and net income fell 71%. Companies with this sort of fundamental performance usually command price-to-earnings multiples far lower. But those who are bullish on Tesla stock often explain that its valuation is based on what the company has in the pipeline. For instance, Tesla told investors in its fourth-quarter earnings call that it would be launching testing of its unsupervised full self-driving taxi service in June in Austin. Tesla believes that eventually all the vehicles it sells will be capable of driving themselves and will be able to be deployed into the taxi network to earn Tesla and the owner of the vehicle money. Looking beyond this robo-taxi service, as Tesla calls it, the company also has a fast-growing energy storage business. Tesla's energy generation and storage revenue rose 113% year-over-year in Q4. This put the segment's total revenue at more than $3 billion, or 12% of total sales. Tesla believes this fast-growing business will grow to represent an even larger portion of the company's overall business over time. Then there's Tesla's product development of humanoid robots. Though Tesla isn't selling any humanoid robots yet, Musk is confident that this will become a major driver for the business in the years ahead. Tesla plans to start humanoid robot production this year. All of these product aspirations have the potential to create incredible shareholder value over the next 5 to 10 years. The bull case for Tesla stock is that one or more of these big bets, along with an expected re-acceleration in auto sales, will pay off handsomely over the long haul, helping the automaker easily live up to its sky-high valuation. Of course, skeptics point out how uncertain and risky these business ventures are. Producing humanoid robots, for instance, will be extremely capital-intensive. Additionally, it's difficult to quantify how successful Tesla will be in deploying a robotaxi service. Further, Tesla's energy storage business requires rapid growth in battery production, and Tesla may have to choose between allocating those batteries to cars or energy projects in years where there are constraints on battery production. Still, investors shouldn't shy away from the stock just because there are risks to Tesla's bold plans for the future. There's always risk involved in buying shares of publicly traded companies. No one knows the future, but it might make sense to watch from the sidelines for now, hoping for a chance to buy the stock at an even better price. A lower price would reduce some of the risks associated with potentially overpaying for the stock. Alternatively, it might make sense to buy the stock at its current price if fundamentals dramatically improve over the next 6 to 9 months. Also, if future earnings calls provide more visibility into a clear product roadmap, then maybe it would be easier to justify the stock's current price. For now, investors should approach Tesla stock with a skeptical eye. This is a fair way to think about shares given their current valuation. Things can change in a hurry. After Tesla, TSLA, saw its stock price explode following President Donald Trump's victory in early November, much of that rally has now been erased, a trend that continued this week. Shares of the electric car maker had fallen close to 15% for the week as of Thursday. Well, blame Europe. The big culprit hurting the stock this week is coming from Europe. According to the trade organization ACEA, sales of Teslas in January declined by 45% across the European Union and United Kingdom. This happened while the region saw electric car sales increase significantly. Meanwhile, investors are bracing for Q1 sales to be the lowest seen since late 2022. Some surmise that the price drop could be attributed to investors taking gains after the incredible rally, while some think Tesla's CEO Elon Musk's political actions in recent months have hurt the brand. BBC recently cited an unnamed former senior director of Tesla's Europe, Middle East, and Asia division as saying that politics is definitely one of the reasons for the decline, but that there are also a cumulative number of things that are piling up a domino effect. The valuation rose too far too fast. It's hard to know the leading factor impacting the stock right now, but I think it's simply a case of the valuation running too far too fast. After the epic post-election run, Tesla's valuation peaked at nearly 194 times forward earnings estimates, well ahead of peers in the Magnificent Seven. This makes the stock much more susceptible to pullbacks, even on minor bad news. I'm still skeptical of tech and AI valuations, given some of the challenges ahead. Musk has spent much of his time since the election working alongside Trump in Washington, often sleeping in his government office and posting on his social media site X, formerly Twitter. His Department of Government Efficiency, which he acts as the face of in an unofficial capacity, but is actually led by someone else, according to the White House, has been pushing cost-cutting at multiple government agencies, even those that regulate Musk's companies. Musk also took time out of his schedule to endorse Germany's far-right Alternative for Germany party and participated in an online campaign to convince British officials to release far-right agitator Tommy Robinson. His political activities, which included his massive financial support of Trump during the presidential campaign, have cost Tesla about $15 billion in brand value, Brand Finance told CNBC last month. Antagonism toward the CEO was a big factor in Tesla's declining reputation and sales, although the company's aging products also had a part to play. I believe the recent pullback is largely related to investors recalibrating their delivery expectations for 2025.